Just imagine the huge sigh of relief, or maybe a gasp of pure disappointment, that hit investors all across India on December 17, 2025. This was the day thousands of hopeful applicants finally learned their fate, as the ICICI Prudential AMC IPO allotment was officially announced. For weeks, everyone had been buzzing about this massive public offering, one of the biggest IPOs of the year, valued at an insane 10,602 crore rupees. The moment the clock ticked past the final decision, a digital stampede kicked off. Investors, from the super experienced traders to those just dipping their toes in for the first time, absolutely flooded online platforms. KFintech, the official registrar, plus the BSE and NSE websites, suddenly became the absolute hotspots for this crazy search. Searches for things like ICICI Prudential AMC IPO allotment status and ICICI AMC IPO allotment status can be checked online, absolutely skyrocketed, showing just how much anxiety and excitement was in the air. You could practically feel it. This wasn't just about checking a status update, it was about finding out if they'd snagged a piece of India's financial future for their own portfolio. The massive size of this IPO, combined with how instantly you could find out online if you got shares, turned what would normally be just another financial event into a super high-stakes moment for tons of people, all just desperate to see if their investment dreams were finally coming true. So, what made this particular IPO such a huge draw for investors, and what exactly did the results mean for everyone who threw their hat in the ring? Right in the middle of all this financial buzz was ICICI Prudential Asset Management Company, a huge player in India's fast-growing asset management world. Since it's a major subsidiary of ICICI Prudential Life Insurance, its market launch was a really big deal, not just for the company itself, but for the whole financial scene it's a part of. This IPO, a massive 10,602 crore rupee offering, was set up to cash in on the strong investor demand for solid, established financial companies. The whole process, from applying to getting your shares, was handled super carefully through digital channels. KFintech, who was basically the registrar, played a crucial part, acting as the main way for investors to check if they got their shares. Meanwhile, the Bombay Stock Exchange, or BSE, and the National Stock Exchange, NSE, right there in Mumbai, were named as the listing exchanges, getting everything ready for the company's first day of public trading. Brokerage platforms like Zerodha and ICICI Direct also made things easier for their clients, giving them super easy access to apply and check their status. This whole digital-first thing really showed how modern India's financial markets have become, making it easier for everyone to get involved, but it also dialed up the real-time tension of finding out if you got shares. The sheer scale of this offering and how smoothly it was all done digitally really put a spotlight on how sophisticated India's capital markets are getting, drawing in all sorts of investors who were really keen to be a part of India's economic growth story. Once those allotment results started rolling in, something else really got everyone talking: the grey market premium, or GMP. Now, this unofficial number, which is often a pretty good way to gauge how investors are feeling, suggested a vibe of cautious optimism. Back on December 17th, the GMP for the ICICI Prudential AMC IPO was floating around 15 to 16%. For those hopeful investors, this basically meant a potential listing price somewhere around 2,490 to 2,500 rupees. That's a decent, though not massive, jump from the issue price of 2,165 rupees. So, it hinted that people who actually got shares could expect some solid listing gains, nothing mind-blowing, but still good. Now, financial gurus, who were keeping a very close eye on things, offered a slightly more nuanced perspective. They totally agreed the company had really strong fundamentals, pointing to its powerful presence in the asset management game and a lot of room to grow in the long run. Because of this, a lot of them suggested a long-term holding strategy, telling investors to look beyond just those immediate gains. But, hold on, there was also a word of warning. Some experts pointed to the IPO's rich valuations. So, this put Allotment in a fascinating spot. Do they cash in on that expected listing pop, or do they hold onto it, hoping for even bigger returns down the line? That GMP, even though it's unofficial, really gave a tangible peek into what the market was immediately expecting, fueling even more speculation and strategic planning among everyone who'd snagged some shares. Alright, so for the thousands who threw their hat in the ring, the results were a real make-or-break moment. It basically split everyone into two camps: those who were absolutely thrilled because they got shares, and those who were pretty bummed out because they didn't. Now, if you were one of the lucky ones to snag some shares, things moved pretty fast after that. December 18th, just a day after they officially announced who got shares, was a busy day. They started processing refunds for everyone who missed out, and more importantly, the shares actually landed in the demat accounts of the lucky Allotments. This quick financial turnaround really highlighted how real and immediate the impact of this IPO was. And get this, based on the grey market premium, those expected listing gains of 15 to 16%, they actually translated into a really nice listing pop for the Allotment. This wasn't just some theoretical number, either. We're talking about potentially unlocking a massive 1,500 to 1,700 crore rupees in value for those who manage to get their application through. Just imagine the buzz of seeing those shares pop up in your digital portfolio, knowing a really nice return could be just around the corner. On the flip side, for those who missed out, December 18th brought the relief of a refund, sure, but also that sting of a really big missed opportunity. All this urgent activity, from constantly checking your status to finally seeing those credits or refunds, really sent search volumes through the roof and kept this IPO front and center for everyone. It just goes to show how real the financial stakes were for every single person involved. Alright, so beyond just what individual investors gain or lose, this ICICI Prudential AMC IPO actually has some much bigger implications for India's financial scene. This blockbuster offering really shows just how hungry the market is for asset management firms, a sector that's absolutely exploding thanks to India's mutual fund boom. If this IPO performs well, it's going to set a powerful benchmark for IPO sentiment in 2025, potentially paving the way for a ton of other companies to jump into the public markets. What's more, how ICICI Prudential AMC does on the stock exchange will definitely impact the valuation of the entire ICICI Bank family, seeing as it's such a key part of their business. With the listing date of December 19, 2025, fast approaching, everyone's eyes will be glued to the stock's debut performance. Will it meet or even beat those GMP expectations? Will those rich valuations that experts are flagging turn into a roadblock, or will the company's solid fundamentals really push it towards consistent, long-term growth? The answers to these questions won't just decide how its new shareholders fare right away, but they'll also give us some seriously valuable insights into the health and direction of India's capital markets. This IPO isn't just another deal, it's a whole story playing out, truly reflecting the energy and massive potential of one of the world's fastest growing economies.